Hello and welcome to your Goodwill Taxes tax law training. And in this section, we are going to cover the topic of income. You're going to find income in your tab D of your 4012 that you should have received either electronically or in paper format. So if you turn to 4012, you should be able to follow along right with me as I go through the concept of income. So income is found on your 1040 on the page 2, and it's found at the very top here. So it looks like we have 6 lines here that are covered by income. So why do we have certain lines here and certain lines here? The lines that are here are simply reportable amounts. It will not necessarily be the same amount that carries over to this line here. The lines on the far right are for taxable amounts. So we might report 10,000 of something, but only be taxed on 2,000 of it. So anything that's inserted here that's moved to the left a little bit, that is going to be reportable amounts. And then to the far right is going to be taxable amounts of income. Now the IRS says that everything is taxable unless they say that it's not. And so on page D1, we're going to find a quick reference guide for what is considered taxable and what is not considered taxable. And so here we've got items that the table A lists as examples of taxable income. And then there are certain things that the IRS has specifically said are not taxable. And so in table B, we have examples of non-taxable income. So you might have taxpayers who will have both taxable and non-taxable sources of income. So let's start to go through what are some of the more common things that you will see. So you will more than likely see a lot of W-2 income. W-2 income appears on a W-2. So if you've ever worked somewhere else, you've received a W-2 and you know that there are certain things that the tax preparers need to pull from the W-2. One of the things that we have to pull from that W-2 is line 1. Line 1 is wages, tips, and other compensation. And so line 1 is right here. Then line 2 is going to be the federal tax withheld. Line 3 is going to be Social Security wages. Now this will need to match line 5, which is going to be Medicare wages and tips. And so those two amounts should be the same. Line 1, wages, tips, and other compensation, that could be a different amount, but we put on our into our software whatever it is the company has reported as line 1, line 2, line 3, line 4, and line 5. Now, we could have things on other lines, but we will always have something on these lines. But we could also have things on other lines as listed here. And there could be something on line 12 through 13. If there is something on a line, it needs to go in the tax software. So everything that is reported on this W-2 is important, and we have to do something with it. If there is a line with a number on it, we must do something with it. A similar form that we could see is a form for interest income. It's called a 1099 INT. And so again, this form is going to come, and we want to keep in mind that what is reported on the W-2, the 1099-T, and other forms is also reported to the IRS. So the company that is reporting those numbers to our taxpayer is also reporting those numbers to the IRS. So we don't want to make any mistakes as it relates to reporting the numbers from the 1099-T or the W-2 or any of the forms, because the IRS also has a copy of that. And so they will catch that mistake if we make it. But we don't want to make mistakes like that for our clients. So here's a copy of a 1099-INT. We want to watch for anything, any box that has a number, and then transition that directly into the software. Now these amounts are going to appear on line 2A and 2B. And remember, line 2A is the amount that is slightly indented to the left, and then line 2B is the amount that is going to be taxable. And then our Schedule B is where the detail of all of these that we enter will flow through, because we could have 5 or 6 of 1099-Ts that we need to enter, and the details would be housed on this 1099-T Schedule B statement. Similar to interest is ordinary dividends. So dividends can be ordinary. They could also be qualified dividends. We could, on this form, have the company report capital gain amounts. So again, if there is a box or a line with a number on it, it needs to go in the software. And the detail of all of these, because there could be several of them, will flow through to a Schedule B. It's the second half. It's Part B of the Schedule B. On the front of our 1040, line 3A and 3B, the information from this form will flow through, provided we've entered it correctly. It will flow through correctly to lines 3A and 3B. 3A being the reportable amount, 3B being the taxable amount. Other forms that we could see regarding IRA distributions. IRA distributions are reported on line 4A and 4B. And again, we would get a form. It's called a 1099-B. We're going to get a form that's going to tell us exactly what we need to enter. And so if we're following along in our 4012, you're going to find this referenced on page D 30 through 40. Now on that form, I'm not sure if I can get this big enough. There's a box that says taxable amount not determined. And so what that means is we have to determine what is the taxable amount. And it's really easy with the software. And this is addressed on your 4012 on page 33D, 33 through 34. And when we have that amount that's checked, taxable amount not determined, we need to use what's called the simplified method, and it's right in your tax software. And so that is definitely something you want to know, because you will see this. And so we have to enter the amounts from box 1, which is our gross distribution, the amount from line 9B, which is our planned cost. It's our contributions with after-tax dollars. And then the starting date of the annuity, the joint or survivor, whether it's a joint or survivor annuity, the death benefit exclusion, which is usually 0. We could have a circumstance arise where it's not. And the age at the start date. I want to bring your attention to that. So when we are talking about the age of our taxpayers, if we have a survivor annuity, a joint or survivor annuity, that means that we have to add both spouses' ages together. And we have to add them together as of the start date of the retirement. So if we have a birth date that happens, let's say it happens in January, okay, and the plan doesn't start payment until June, we would have to consider the fact that that person had a birth date at the start date. What if we have somebody who doesn't have a birthday till October and the plan started in June? We would have to consider that they haven't had their birthday for that year. And so as we calculate the age of our recipients of the annuity, we need to consider whether they've had their birthday or not have their birthday at the age the annuity has started. So then we want to enter the number of payments that were made during the year. If it's a full year, it would be 12 payments. If not, it could be less than that. And then amounts previously recovered from a prior year return. We would need to know that from the prior year return. And then exclude from income amounts of public safety officer PSO paid for insurance premiums. That's going to be up to $3,000. And again, all of this information is very easily entered in the tax software. And so there's nothing you actually have to hand calculate. And if you want to read more about it, I have given you kind of a snippet of one of the pages. I'm not entirely sure where I found this page, but it talks about what if the taxable amount is not calculated. Another form of income that we might see is in the form of Social Security. Social Security is listed on page 5A and 5B. Again, 5A is the reportable amount, 5B is the taxable amount, and usually this form comes in, it's like a reddish pinkish color, and it is usually going to be just for each individual taxpayer. So my spouse might have one and I might have one, and we would each get one separately. Social Security can become taxable given certain circumstances, but only up to 85% of Social Security tax benefits can be taxable. We can't tax 100%. So those are the most common forms of income that you are going to see. But you might see additional income, and so that's where we divert over to Schedule 1. So Schedule 1 is going to have several lines for additional kinds of income that we could see. And so what's going to be on that Schedule 1? Lines 1 through 22 of our Schedule 1 will report back to line 6 of our 1040. And so some of the things that we're going to see on the Schedule 1 is going to be taxable refunds, credits, or offsets of state and local income taxes, alimony received, business income, capital gains and losses, rental income, farm income, unemployment compensation. All of these things could be things that your taxpayer will have. And so that's going to be reported on the Schedule 1, totaled and brought back to line 6 of the 1040. What is a taxable refund? I mentioned that taxable refunds can be found on Schedule 1. Those are found on line 10 of Schedule 1. It's talked about on page D12 of your 4012. If you itemized deductions on your federal tax return last year and you claimed a deduction for state and local income taxes, you will then need to calculate the taxable portion of the state refund. So if your taxpayer itemized last year, they could have to report this tax refund as income, the state refund as income. If they did not itemize, they would not have to report it as income. And usually everybody gets a little card in the mail from the state telling them what they had as a refund on their state taxes. And again, if your taxpayers paid in, they're not going to get that card because they didn't get a refund. Other things that are going to be showing up on the Schedule 1 are going to be rental real estate income. So our taxpayers could receive rents or royalties, and that would be reported on line 17. Our taxpayers could receive unemployment compensation, and they would receive a 1099-G for that. But that would also be reported on the Schedule 1. Again, if there is something with a line with a number on it, it needs to be entered into the software. And then you could have other income, such as gambling winnings. So if our taxpayer has gone to some place and participated in a gambling activity and had some winnings that are of enough substance that the entity where they won the money, then they would have to report that on their tax return. And again, anything that is on this form needs to be reported. Losses are not netted against winnings on the W-2G. Losses are reported somewhere else on the tax return. So we don't net anything against this. We just report it as we receive it. And then there's other various types of income. If we have something that's not already found a home somewhere on the tax return, we can report it under other income, various types, line 21. Line 22 then gets totaled, and that total goes back to line 6 of the 1040. So that is your tax law as it relates to income. And again, go back to your 4012, because your 4012 is going to give you detail that I did not necessarily give you. All of this information is found in tab D of your 4012. Thank you for watching and have a great day.